Warren Buffett is not only just matching S&P 500 returns, but he's actually losing substantially. So has Warren Buffett lost his edge? And what strategy should you use instead? My name is Matt Postis. I'm a millionaire serial entrepreneur, and I'll share with you today the strategy that I used to get to a net worth of over $10 million in my early 20s. I believe Warren Buffett, I respect him greatly. He used to be a great investor, but now if you look at the returns 5 years back, he's way behind S&P 500. We look at 10 years back, okay, the gap is closing a little bit, but still not good. 15 years back, okay, that's when Berkshire Hathaway is now beating S&P 500 a little bit. And by the way, I'm a very conservative investor actually, and the only stock that I used to own was just S&P 500. But I will share with you what I'm doing now that's outperforming Warren Buffett substantially. Now, when we look back 20 years, that is when Warren Buffett still clearly had an edge over S&P 500, and he clearly outperformed the market by an insane amount, and he beat everyone basically. And Warren Buffett is known for his high returns over his career, over 20% in fact. And if you look here, Berkshire Hathaway stock could drop 99% and Buffett would still beat S&P 500. By that they mean since 1965, the stock could drop 99% and still be ahead of S&P 500 index since 1965. We're not taking into consideration the last 15 years, which is when Buffett obviously is now a little bit old. Warren Buffett is now 91 years old, and his right-hand partner, Charlie Munger, is 98 years old. Warren Buffett admitted that his reading speed is a lot slower now, so maybe that's one of the reasons why his returns are not as great as they used to be before. But hey, look, over long term, no arguing. Warren Buffett has done exceptionally well, but he missed such huge gains from Microsoft, from basically every technology-based company that you can think of, including Amazon, that's a big one, including Facebook, including Google, now that's a big one, and of course, Tesla. I think there's a much better way to go about investing than what Warren Buffett is doing right now. If you want safe investing, I think Warren Buffett is great for that. Safe, regular returns, good returns, stable returns, Warren is great for that. But if you want to beat the market, his strategies I don't think are applicable anymore today. Now, he could continue to do pretty well, and he basically matches S&P 500 when you look at his returns, but clearly long-term, it's no longer where it used to be. And I think, Warren Buffett is also not known to use computers and smartphones and anything else that involves any sophisticated technology, which I think shows in his returns from now on. And I don't think they will really get better. So what should you do instead? Well, there's this other strategy which you can learn how Chicken Genius Singapore, which I know that's a funny name for a YouTube channel. I made a video about him a few days ago, how he picked Tesla before it 10x'd. He uses this very interesting ratio off. You can find out about that in that video. Just look for a video called The Chicken Genius Singapore Prediction About Tesla Stock Come True, and you will see his strategy, and that strategy beat what Warren Buffett is doing. So what am I doing for investing? Well, I have real estate, and also I have stock of this one company which has the biggest moat that you can possibly have. And Warren Buffett and Charlie Munger are big on moats. The moat is so big that no one is able to catch up to it. And when you think of companies like, for example, Google and Facebook and Apple, naturally they have big moats. Now, this other company that I own, it has a huge moat, and the moat is based on innovation. They innovate, they out-innovate everyone else, and they are so far ahead of everyone else that there's no way anyone is going to catch up to them as long as that culture of innovation persists. So what stock am I talking about? Well, that stock I first bought in 2019. It was early 2019, and right after I bought it, the stock dropped 40%, but look what happened later. It went berserk. In fact, up to its highest point from that moment, it went up almost 2,000%, which would, and if we go until today, it would reflect returns that you would see from Warren Buffett when he was starting out. And this company, if you haven't figured this out yet, is Tesla. Why Tesla? Isn't it a risky company? Isn't competition coming? Well, competition is coming nowhere near Tesla. Tesla has such a big advantage and such a big moat based on innovation because they just out-innovate everyone else. Till this day, everyone else is just trying to catch up to what Tesla was able to do in 2017, and now it's 2022. They have a big lead in full self-driving, which is the next big technology that is coming around. And this is not financial advice, by the way. I'm not certified to give financial advice. My background is I'm a serial entrepreneur. I built multiple companies that did millions of dollars, and my net worth is over $10 million. I got to that in my early 20s, and now I'm 26. I'm almost 27 now. Don't take this as financial advice, but I'll give you some of my thoughts about Tesla. So Tesla has an insanely big moat because of innovation. For example, Tesla figured out how to build cars with this one big rear casting. So before you would have about 200 parts just to build the rear of a car. Now they can do that in just one casting, which saves, you don't need hundreds of robots in the factory, which saves time for production. Also, the costs of producing such a car go down, and also you need less material, you need less labor, you need less of everything. The margins skyrocket. Anyone could have in theory done it before, but how come they didn't? No other car company did it, or even attempted to do that, until Tesla, Elon Musk, actually did it. It's because within Tesla, there's such a culture of innovation. The company is built based on that. Now, I'll also explain to you why Tesla, in my opinion, is a safe investment. If you look at the earnings of 2021 from Tesla, and if you project those same earnings into the future, in 2021, Tesla delivered almost 1 million cars. It was just a little bit over 900,000 cars. So just project those to then you think Tesla will deliver 10 million cars. Now, if this is your first encounter with Tesla stock, you might think, well, there's no way Tesla will get to 10 million vehicles per year. How will Tesla beat all other companies? Well, I would suggest to look into Tesla deeper. It already beats in the US, it's already the best-selling vehicle, luxury vehicle of any kind, whether it's electric or not. That already happened. And Tesla is production constrained, not demand constrained. I don't think there's any issue with demand at all, and they are number one in the EV market. It's not really clear who number two is going to be, but Tesla is clearly number one. And if you just project those earnings from 2021 to then Tesla will build 10 million cars, and you just apply a PE ratio of any ratio that you think a mature company later that has still potential to grow, whatever you think a PE ratio is fair, and you will see that you will get bigger returns than what you would normally expect from S&P 500. And that's basically a bad case scenario for Tesla. I believe Tesla will deliver a lot more cars than 10 million vehicles in 2030 as an example. Also, there's full self-driving, where I think they are clearly number one. They also have other things going on, such as energy, solar panels, energy storage, big batteries, and then there's also Dojo as a service, and then there's also Tesla bought Optimus Prime, which is basically within Tesla, you have a big company that's already, you could say, matured, but it's still growing fast. And then you got those startups. So you get the risk of a big company. I really think you get risk that's lower than that of a typical big company, but you get returns that are like a startup almost, because there are literally multiple startups within Tesla, and they are innovating hard, non-stop. If it's your first encounter with Tesla stock, I highly suggest watch the video that I did, why Tesla stock is a safe investment and why I only own Tesla stock. And the other video, the main reason why I own Tesla stock, just browse through the channel and you will find all that information. Again, not financial advice, This is just what I'm doing. If you look at those returns here, I first bought Tesla in 2019, early 2019. My timing was admittedly not exactly the best because the stock went down basically 40% right after I bought it a few months later, but it skyrocketed. You might think it's too late. I think today is actually a better risk to reward ratio to get in today than to get back in 2019. Back in 2019, Tesla did not have extremely strong financials, whereas today, Tesla has literally basically zero debt and has good earnings. There's no way we're gonna go bankrupt now. That's just not going to happen. There's way too much demand for Tesla vehicles. They're approaching 30% vehicle gross margin. That's unheard of. And they are selling vehicles. For example, one of the competitors from Ford Mustang Mach-E. I test drove that car. Pretty nice car. Not as nice as Tesla, nowhere near as nice actually. Ford is actually losing money selling that vehicle right now. There were reports that came out last month in June, and Tesla can sell an equivalent vehicle that's actually better than that vehicle at that same price that Ford is selling, and they can be profitable. So competition is coming. Nowhere near Tesla. They're far away. There's so many other advantages to owning Tesla. For example, what's the number one company that all engineers want to work for when they graduate from university? Engineers. It's number one Tesla and number two SpaceX, both owned by Elon Musk. And the third one is so far away from Tesla and SpaceX, it's not even worthy of mentioning. The gap is so big. And Tesla and SpaceX may change. Sometimes SpaceX is number one, sometimes Tesla is number one, but they're very similar in percentages. But then you go to the third spot and it's such a big difference. It's wild. So that, I think, is a better investing approach. And I think there's still a lot of room left for Tesla to grow. That's why I only hold Tesla stock. Of course, I own real estate and private businesses and I have strong income. So in a way, I am diversified and protected. You have to think what ratio of Tesla stock makes sense in your portfolio. I would not necessarily advise to own only Tesla stock if you don't have any other assets or strong income, or if you are about to retire. For many people, it makes sense. But if you are more worried, if you're more careful, maybe that's not the right thing to do. But if you do that, I certainly respect that. And I think you will do very well. You just need to hold through that volatility because we know Tesla is extremely volatile. And we could have another period of maybe 5 years or longer where Tesla stock basically did nothing. I mean, you can find periods where, let's take it from here, 2019, August 2nd, and there was basically no return for almost 5 or so years. And that could possibly happen. But still, when you take in the returns, even if you bought here, you're still laughing today when you look at your bank account because the returns are just funny. It's unreal, crazy, wow. If you haven't watched the video why Tesla bought Optimus Prime is possible, you should watch that one because that's going to be, if Tesla can figure that one out, ooh, Wall Street is not even pricing in full self-driving. They're not pricing in energy, I don't think, really. And they're definitely not pricing in any possibilities if Tesla bought Optimus Prime. And I understand why. But, you know, they used to say that smart money was the hedge fund money. Institutional investors that was the smart money. I think now, with information available so widely and everywhere, I think sophisticated retail investors, that's the new smart money. And what is smart money doing right now? I think we're buying Tesla stock, in my opinion. At least that's what I'm doing. I keep buying Tesla stock as much as I can, and I will keep doing so. My name is Matt Posius. I will see you in the next video. Thank you for watching.